Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Jayne Hrdlicka and welcome back.
Thank you. I'm Juliette Sarli. Nice to be with you as always. Danny, you were saying to me earlier, markets treading water a little today.
Yeah, totally. Well, we haven't had a lead from Wall Street since Friday and there's a lot going on underneath the surface at the moment, but the indices pretty flat. So there we go. The SIBO 200 down by 2.5 points, yawn, and the ASX 200 down by about 14 points. So just almost, 0.2%, Jules, but not much really happening. But under the surface.
Well, under the surface. And I think what's really interesting is to have a look at that dip that happened just after 10, which was obviously the market reacting to BHP. Let's have a look at our themes. Obviously the iron ore sell-off as well after the Lunar New Year holiday. But we've written here nickel no dime, because obviously that write-down in BHP's nickel business means the dividend, I mean, there still will be a dime, but it's 20% lower than it has been in the past.
Yeah, I guess that's also too coming off really strong results that they've had in the past. But nickel is a big problem because Indonesia has been producing a lot of nickel, and a lot of our nickel producers have been shutting down their operations. But historic takeover.
Yes, absolutely. Very fascinating. The Australian Competition Tribunal saying ANZ can go ahead with that Suncorp takeover, even though the ACCC itself had those concerns. It's going to create another behemoth in Australia's already pretty, I guess, huge banking conglomerates that we have.
Absolutely. I wrote about, can you smell the irony? On one hand, everyone's getting stuck into our major retailers, and on the other hand, they're allowing lots of, more acquisitions to go on. Now let's have a look at some of the sectors today and see what's been happening there. And the big miners, as Jules was saying, continuing to see a sell-off in Dalian iron ore futures, which were off another 4% today. And as well as BHP results, you're seeing profit taking coming in across the board there. Rio and South 32 as well as Fortescue all under pressure.
Yeah, and energy also took a bit of a beating today. These two sectors were the worst. Let's have a look at the energy players. Okay, it's not working. We'll go and have a look at the banks instead. Yes. Never wrong for long here. ANZ down 2%, getting that takeover. Combank also a little weaker. NAB and Westpac looking good. Macquarie under a little bit of pressure.
And let's check in with some of the top corporate stories, and this is outside of reporting season. So as Jules said, ANZ's $4.9 billion Suncorp Bank buy was approved by the Australian Competition Tribunal.
We also had Star Entertainment delaying its earnings after a regulatory inquiry from the New South Wales casino regulator said it wasn't satisfied with the cultural overhaul, and Star down 20.5%.
Yeah, that's a bit brutal. But lots of earnings today, and BHP's group fell after underlying profit slumped to US 6.6 billion, and they cut the interim dividend to US 72 cents from US 90 cents.
We've got ARB Corporation also surging after its first half profit grew, and
Sims Metals disappointed as margins give way, basically impacted net profit, which slumped in the first half of 2024. And just really quickly, we did speak to the Hub CEO today, Jules. That company doing so well, as is Netwealth. Both of those reported earnings today. Sonic Healthcare was a miss on those earnings.
And Baby Bunting, net profit remaining flat, its shares down by about 11%. Megaport swinging to profit in the first half of fiscal 2024. So of course there are some of the big movers that we've seen across the day's trade.
And now let's move on to our guest of the day, which is Martin Crabb from Shaw & Partners. Martin, great to see you as always. Lot going on underneath the surface. Remember we talked about that duck last week,
duck.
That was our last week, duck on the lake analogy.
I think
Can we use it again?
The duck's still really busy.
Every Tuesday's duck on the water day.
Exactly, but God, I'm having visions of when we used to do this with Kyle. But anyway, deja vu, jokes aside, how are the earnings coming up so far? Because on balance, just anecdotally, they seem pretty good.
Yeah, so it's easy to get caught up in the news flow of the day, and as we were just talking then, BHP was in line, and this was a bit better. Just looking at the aggregates though, so adding up all the analyst forecasts for 2023, because we're looking at 2023 earnings here. We have seen about a 3% upgrade to 2023 earnings this year, which doesn't sound like a lot, but you consider that the economy outperformed last year and earnings start to head up. So this is just the trajectory of earnings, and you can see that most of last year people were downgrading earnings, as particularly as China disappointed, because a lot of the delta or the rate of change of earnings in Australia is from metals. But just on the right-hand side of that, you can just see the tick up in the black line since the end of the year. Now, again, it doesn't look kind of material, but it is. It's about a 3% upgrade. Interestingly, people haven't been moving the grey line, which is 2024 earnings. So companies haven't really been coming out with guidance saying, yeah, next year looks really good, or this year looks really good. They're just telling you that they're probably operating a bit better than people thought, in particular on cost management, because obviously costs were the number 1, 2 and 3 issue on analysts' radar going into this reporting season, how they manage costs, and companies have done a really good job on that. So if you look at the gap between the two, which is the implied growth, it's down to 1.5%. So the market thinks there's only going to be about 1.5% growth between this the calendar year just finished earnings and the calendar year that we're in. When you think the economy is probably going to grow at 4 to 5% in nominal terms, because you've got inflation at 3.5, probably 1.5% GDP growth. So we've got an economy growing at 5, yet earnings are only growing at 1.5. So they look underdone to me. Look, a lot of it is expectations on iron ore. Banks have got negative EPS growth priced in. They're going to grow earnings. I reckon that's pretty obvious out of what we've seen so far. Bad and doubtful debts are not an issue. Margins are holding up okay, and there is credit growth out there because of the housing market. So I think we've added to banks in our portfolio because we're underweight. We think that's an earnings upside story. In fact, the whole market's an earnings upside story.
Speaking of banks, your thoughts on the fact that the Competition Tribunal has said ANZ can take over Suncorp? Yeah,
interesting. I mean, I think the ACCC were the only people who thought it was going to materially impact competition because it's such a small bank, and it's predominantly in one state. So everyone in the industry thought that the ACCC was wrong in their decision, and obviously that's what the tribunal has come out with. Interesting market reaction. So if you look at the change in market cap, ANZ fell by $2.5 billion in market cap today, and Suncorp went up by about $1 billion. So net, this transaction is deemed by the Australian share market to have detracted about 1.1 billion of value, or 1.3 billion of value. And had both the stocks just been gone up with the market, there'd be another 200 mil of market cap. So there's about 1.5 billion that's been lost somehow in this transaction getting approved. Now, it's clearly positive for Suncorp because they all of a sudden got a whole bunch of cash. They'll probably do a buyback. But with ANZ, I mean, this is like ANZ's an $80 billion company. This is not a big deal for them. How they lost $2.5 billion. Obviously, people were were long into the result, hoping it would get knocked back, and it didn't. So there's a bit of an overreaction there to ANZ today, I think.
Now these platforms, they're firing on all cylinders. Great results from both Netwealth and Hub.
So you spoke to Andrew from Hub earlier today, and I heard your previous guest talking about these as well. But just from my perspective, the banks owned all the investment platforms. They were the ones that had the big checkbooks, and they whether it was Macquarie or BT at Westpac, spent lots and lots and lots of money building these platforms. They've all got out of wealth because obviously the Hayne Royal Commission really belted them.
Yes.
So they've all got out of the advice business, but they've kept their platforms. They don't really want them. They don't really they're not natural owners, I don't think. And a lot of people are leaving these bigger advice firms and going out on their own. And they're attracted to the value proposition of Netwealth and Hub, who seem to have a better tech stack. They're a bit more advisor friendly. They're less clunky. They don't take as long to upgrade. So I think they're clearly winning market share, but they've still got a long way to go. And here's just the share prices over the last 3 or 4 years of both Hub and Netwealth. And it looks like Hub's massively outperforming, and it is. Its
margin accretion has been really quite good. That's my understanding relative to Netwealth.
They did have a little bit of a pickup in their cost-income ratio last result, but it's just the growth in FUM or FUA. It's just very, very strong for both businesses, and they just look like they'll continue to grow just through market share. It's not like we need more clients and more advisors. We're just getting an increasing share of those advisors using these two platforms. So the outlook for both of them looks pretty good.
Martin, you're if you had to give a report card on reporting season so far, something like 90 companies in fact have reported.
Yeah, it's probably a B-, something like that. So I think beats have outperformed. So if you beat, you go up by 5. If you miss, you go down by 3. I think that's the number. So it's been net. But I think Yeah, that I think coming back to that upgrade story, Julia, that's probably the most important thing for me, is that companies are doing a lot better than people thought they would, so the better than feared narrative, and we're starting to get a bit more confidence that maybe this year might be a little bit better than we thought as well. So I think so far so good. You always get the cockroaches, as we call them, right at the end.
Yeah.
So you kind of got to wait till you're right through the end of
There's
reporting
a rush,
season.
isn't it, for
Yeah,
the
it's
little
like,
cockies to
these
come
are
out of
really
the
bad
woodwork.
numbers. Let's just pretend that let's just hopefully get them out. You know, when we used to have the Perth Stock Exchange back in the day, these companies would report, you know, at 5 o'clock in Perth time, so 8 p.m. Sydney time on the last day. On the last day, yeah. And
All those little mining nasties.
That's right.
Yeah.
Hopefully nobody noticed.
And then,
so
look
far,
at
so
this
good.
shiny thing with another press release over here.
Yeah,
Exactly.
I was just looking, FN Arena currently, they've only, 95. Is that what you were looking
Around
at, Jules?
90, yeah.
Yeah, so 38% beat, broadly 35% in line, and 27.
Yeah,
So
which is pretty good.
A B minus.
A
is
B
that-
minus,
yeah,
I think,
okay.
yeah.
It'll be interesting to see the dividends when it's finally tallied up, to see whether or not the total dividend payouts have also come under pressure.
Yeah, well, that depends a lot
Oh, well,
on the
BHP,
miners.
yeah.
The miners, yeah. Fortescue, BHP and Rio, massive dividend payers. And, you know, BHP's already cut from 90 to 72 cents US, I think. So that's a big reduction.
Need
And then
to
we'll
strip
see.
them out.
Yeah, well, if you take them out, it's probably okay. It's probably okay. Yeah.
All right, Martin,
fantastic.
we'll see you next week. See where the cockroaches and the ducks are going next week. Martin Crabb, Sharon Partners. All right, our stock of the day was Net Wealth. We had David Novak from Wealth Wise Education and Mark Morland from Team Invest giving their thoughts on that company.
The problem with that is the PE ratio. It's currently on 64 times earnings, which if the earnings start dropping off from 17 to 10 or something like that, then there's real capital risk issues on the share price. So quality business, we like it. We don't think the moats are that strong, but we may be wrong. I mean, we haven't got into a lot of detail. In other words, how sticky are the clients once they're in, depending on which part of the business, of course, because there's different parts. And they're all different in how they work. We're showing the return. If you wanted to get a 10% on a margin of safety, which we would want as a minimum, you couldn't pay more than $13.25 for it.
I think on valuation basis, it's looking very expensive. Technically as well, if I look at the charts, if you look at the technicals, even if you go back to 2021 or even further back, this is what they call a major resistance level, selling level up here. So I'd certainly, there you go, that's what the level I'm talking about, where it is now. I would be taking some profits up here. I certainly wouldn't buy up here. But if you bought at lower levels, I think it's a great opportunity to take some profits.
Okay, Jules, should we check in with some of today's leaders? And we have touched on them. ARB, better than expected results, up over 10%. And interesting, Pro Medicus, couldn't find any love last week, but that stock rallying now. The selling has dissipated. Reliance continuing to rally off the back of those results yesterday. In fact, I was looking about 3 broker upgrades I saw to buy or accumulate on that stock. And we have just been discussing with Martin Crabb both Hub24 and Net Wealth and the long-term growth trajectories. So both of those stocks rallying, and Net Wealth up by 5.8%.
All right, let's have a look at the losers today, because it was a down day. Strike Energy down 24%. Star Entertainment, we talked about the New South Wales casino coming out with regulatory concern there, down over 20%. Chalice Mining down 10%. Sims Mining, Metal, and Sayona Mining also under pressure today.
And let's have a look at some of the small caps. And Bravura, wow, they've come out with must be better than expected results, up 29%. Step One, Jules, they've got into ladies' bamboo
Have
underwear.
they? Oh, I have to try them.
And I did have a conversation actually on the weekend about this company. So up 16% today. American Rare Earths 9%, and Quantum Intellectual up about 8.5%.
So the AFR calls them the anti-chafing underwear group, Step One.
Well, that's why my son got them, because he was a rower.
Ah,
Yeah, they're good for athletes. So there we go. Maybe we need them when we're athleticing at the gym.
I've got to be athletic first. All right, let's have a look at the laggards now. Hum down almost 20%. Baby Bunting we touched on. Chalice Mining was there earlier. Intelligent Monitor down 9.3%, and KMD Brands down 8.5% as well. So more laggards than winners today, I should say. Let's have a look at what is coming up overnight.
UK monetary policy report hearings and the Canadian CPI data.
Hey, all
I
right.
just want to check, nothing else happening in the US? It seems awfully quiet for the
Yeah, I
US.
suppose they're coming back after the holiday. A number of companies tomorrow. Charter Hall, Domino's Pizza will be having that interview. Aluka Resources, Iris, Karoon Gas. Flip the board because I think there's quite a lot of companies coming out tomorrow. Centre Group, we're going to be speaking to that CEO as well. Woolies, WiseTech Global, Santos, Rio Tinto. It'll be interesting, Santos as well, after you know the impact of whether or not there has been an impact, but Woodside walking away from that potential merger as well.
And just before everyone goes, just to highlight, companies are going ex-dividend. So if you were wondering why the likes of Wesfarmers were down, ditto Magellan, Domain, Computershare, Challenger, they're all ex-dividend. And tomorrow we do have the likes of AGL, Commonwealth Bank, GQG and IAG going ex-dividend on top of a huge suite of earnings reports. Well, Jules, should we have a final check on the market and see where we've closed out, whether that those final trades on the ASX 200 has made any difference. I've got that down 6 points, and it did rally a little bit towards the end, so pretty much flat, and the CBO 200 off by about 2.5 points, or almost 0.2%.
Yeah, so pretty flat really, not as bad as it sort of looked around that 10:10 and 1 p.m. Session, but we'll see what tomorrow brings, particularly when Wall Street comes back online. We'll bring you, of course, all of the latest and so many CEO interviews for you tomorrow as well. And we've also got our bond event.
Absolutely,
so, yeah,
and you're hosting
I'm
that,
hosting
aren't you,
that,
Jules?
I am.
Exciting.
So 11 a.m. Eastern. You still can register, ausbiz.co/bonds, but just go to our website and find it. Lots of interesting conversations. So join us on one way or the other tomorrow, Ausbiz from 10 a.m. Eastern.
Absolutely. Have a great evening.